Hey everybody, this is David Skarica. So it's January 22nd here. So we're gonna do kind of another theme. It's kind of weird that like basically my two favorite musical artists, um, Robert Palmer, who we talked about on Friday, and Michael Hutchence, so we'll talk about today. Um, um, basically have a birthday within a few days of each other. Today, Friday would have been Palmer's 75th birthday. Michael Hutchence would have been his 64th today. So I've got this. So thing about, I talked about Palmer being born kind of in Yorkshire, which is the area where my dad was born. My dad is from Leeds. Palmer's from a town called Batley, and then he ended up moving to the Bahamas. A lot of those big hits that like "Addicted to Love" were recorded. There was a very famous recording studio in the Bahamas called Compass Point, or AC/DC also did Back in Black. U2, lots in the 80s and 90s. This Compass Point was kind of like the place, you know. Michael Hutchence was born, even though he's Australian, he was born in he was raised in Hong Kong. His dad was like a merchant, like a importer exporter. Um, so Hutchence kind of grew up there, and then he ended up living a lot of there. Actually, like again, a lot of stuff that he recorded that was their famous hits. Like they were, he wrote a lot of Kick, which was in excess's biggest album. You know, in in uh in Hong Kong. So what we're gonna do is a kind of a theme. So I'm gonna post this thing here. This is a really good thing MTV did, and it's on right before the handover of power in 1997. Hutchinson with MTV went there, because he knew the place. He talked to people about what they thought the transition would be like. Everyone was kind of positive, so I think probably they were mostly, because Hong Kong's still not like a bad place, but it's not what it was, in terms of that laissez-faire freedom. It's kind of like one of the last places in the world like that. So this is the Hong Kong Stock Exchange. So a lot recently been made how these Chinese stocks are making multi-year lows, like China compared to India now is almost at an all-time low valuation. Of course, we've seen this huge rally in the US, and we're seeing China and Hong Kong. And by the way, when I've talked about things that can derail the stock market rally, this would be a real warning thing too, that if there's some kind of this real estate problems that are going on in China, if it turns into some kind of banking crisis, I think that could be a real problem. But here's the interesting thing about Hong Kong is that this is the Hong Kong stock market index. It used to be called the Hang Seng. You can see it's just over 15,000. And if we draw a line here, let's draw the line, um, the proverbial line in the sand, and we go back to 1997, which is not that it's that first high over here on the left. What you'll see is the market is now below the high of 1997. So it is now below 26 years of Chinese rule. And the market has actually 27 years, because we're around 2004, has now seen the market do nothing in Hong Kong. And I think it just shows you the importance of the rule of law, capitalism, like having the environment for prosperity as well, because people aren't gonna, like, money used to pour into Hong Kong, and Hong Kong would be this huge boom bust market. You can see in 94, it fell like a 30% after a huge run up of hundreds of percent, and then the huge decline during the Asian crisis, and then right back to the highs. Then during the dot-com bust, it fell like 50%, and then went up 3x. And so Hong Kong was like that, but now it's really, really lagged. Now all emerging markets have lagged since this kind of QE, because QE is really targeting assets in Western markets, especially in the US. But we can just see how badly this has lagged, And if we go look at like the Shanghai index, we'll see the same thing. Like the Shanghai index, after this huge run in the 90s to start, when kind of China started to free up, and then a huge run again here, the Shanghai index is still over 50% off its highs, and the whatnot, and then some of these stocks like Alibaba, you can see Alibaba is now lower now than it was pre-IPO. I think there's a Chinese tech ETF. I want to say Chinese, China tech. Okay, here it is here. And what we'll see here is, you can see again breaking down. So again, this is kind of my warning. And of course, if China busts, that is deflationary because, they're still a huge, they're obviously actually, I think them and Germany are still the two biggest exporters in the world. And they'll probably be dumping products like crazy. So you can see, yeah, look at this below where it was in 2022. And by the way, this is why it's so difficult. I remember last year, there was a guy I knew who was trying to time this, and he had a little rally, but now you're 30% below, And the problem I have with China, and again, is all those things with the accounting, the rules of law. So at some point, will I make investments in China? Maybe, especially because they'll get cheap enough. You can see this China tech ETF is up over 100 from uh down to not sorry, 30. You can see it went under to 20, back in 2012. So maybe it'll go back there. I don't know, but you are getting to the point where like you're over 70% from the high. So maybe you can start looking at it, but I'm still a little bit, I think it's problematic. And like a lot of Chinese real estate ETFs are down 78%. Let's see if we can get there is no, this is all China index, but I've seen they trade more like overseas, right? Let's go to another China index. Yeah, you can just see what these things have done here. Just getting absolutely crushed, down another 3% today. So, I think that's something to watch out for. Because remember, when the 97 Asian crisis and Russian crisis happened, what happened was, the Thai baht got devalued and then everything in Asia got whacked. And that was your warning sign. So that's another thing. As the market's riding high now, well, you always have to beware of the risks, even if you are still bullish and the whatnot. And this is the problem. This is what could really derail thing. And the Chinese banking sector has become huge. So, a couple things to look at here. Look at Win, because these companies, Win has come off its lows, but they haven't done well too. These casinos. I think there's actually a Macau casino stock. I guess it's not here. We'll get it. Macau casino stock. Win Macau. Oh no, Win. Yeah, this is a stock that they have. Win has that trades just based on like some of their Macau assets, and now you can kind of see. We get the all-time chart here. The all-time high of this is 2014 at 450, and now it's 76 cents. So this is just OTC done. So and a lot of these Chinese things have gotten absolutely whacked. Real estate, tech, etc. So again, maybe at some point they're going to be worth looking at. I've been very negative on China for a while. I have had no interest in it. I've been much more, bullish in India. And if we look at the Indian fund here, done way better than anything in China. But just something to look at here. Just wanted to talk about China, talk about how the Hang Seng. So 1997, that was the handover. It's actually the year Michael Hutchence died as well. He died on November 22nd. Same day as actually JFK died in 1997. So so anyhow, I'll post that video below. I'm actually not going to post an INXS song. He did a great remake of an Iggy Pop song called "The Passenger." It's actually, my opinion, one of those remakes that's better than the original. So I'm going to put a little clip of the Passenger below this as well. And Hong Kong below where it was in 1997. When both the handover and Michael Hutchence passing, the year that both the handover and Michael Hutchence passing away happened. And he did that a few months before he died. And I highly recommend that Hong Kong video, even if you're not interested in pop culture or music. It's just a really good look into how people felt, before the handover. And he goes through the city, shows you cool areas, he shows you where he grew up. And Hong Kong's even more built up than that now, and it was pretty built up back then. Okay, so everybody, take care. I hope you enjoyed this. Again, this is the kind of thing we do in Stock Chart of the Day. Not everything is about trading. It's like a lot of the stuff we're doing is educational. So I just wanted to show you like how many people are talking about the Hang Seng or the Hong Kong stock market being lower than it was when the British handed it over. Not many.